It's time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Kiwoom Securities. Mr. Yu, thanks for coming on this afternoon.
Thank you for having me.
So as we just heard, stocks in New York down big time overnight. Again, the trade war with China a major factor. European shares were even worse off. Germany, the UK, France, all down more than 1%. Take us through the global trade.
Yes, if you look at the U.S. market, that was down minus 0.87%. S&P was down 0.69%. NASDAQ was down quite significantly as well. But more so, European market was down more than 1 percentage point, where DAX was down 1.57, FTSE was down 1.15, CAC was down 1.7%, Euro stocks in general was down 1.5. So the Chinese market showed somewhat of decline as well. The main reason for that is because U.S.-China trade war intensified after Beijing signaled that China is ready to retaliate against U.S. by halting exports of rare earth metals. There are 17 vital commodities around, from tech to the cars. This kind of developed after tit-for-tat tariffs, then the Huawei ban potential by U.S. companies, and then the rare earth ban that might be happening from China's front. With this, global slowdown is a big concern. The yield curve has inverted from where, if you look at the 3-month rates and 10 years rates, it has inverted. It happened again since the last year for this year. Now, if you look at the 10 years bond rate, it is at 2.262%, which is one of the lowest since the beginning of the year. Of course, in the past, it did go down to as low as 1.7, 1.8%. But nevertheless, it is indicating that global economy is slowing down. So this is definitely the reason why the global equity market seems to be showing a volatility at this point in time.
Right. Well, on the Korean market today, the story's been a little different, mixed, but the Kospi was up.
Sure. I think that if you look at it, though, it has gone down so much that it's probably the reason why it's stabilizing. If you look at the economic numbers, the Kospi is down from the peak of 2,200 level around this year. So from the bottom of less than 2,000, it went up by about 10%, but now it's down by almost that much amount. And that's the main reason why I think it's stabilizing. The reason for such a big decline is because of the economic growth numbers are coming in a very weak number at 1.8% growth year on year. The Q-on-Q number was down 0.3% in the first quarter, which is very different from the Chinese numbers or U.S. numbers. One of the main reasons for that is because of the facility investment being very weak. So therefore, we need some kind of changes that are happening in regards to the supplementary budget or any kind of rate changes. So we need to see a more aggressive measure to show some kind of growth might be coming back for Korea. For the time being, the earnings growth rate as well as the economic growth rates seem to be very timid, and that is resulting into the Kospi being very weak this year.
Got it. Well, in the meantime, we're going to hear soon from the Bank of Korea on interest rates. The consensus seems to be they'll stay at 1.75%. Do you think that's the case? And what's the reasoning at the BOK?
Sure. I think that the rate will be decided probably on the same rate of 1.75%. But there might be some indication that in the future, BOK might be lowering the interest rate. If you look at it right now, the U.S. interest rate is at 2.25 to 2.5%, which is much higher than Korea's 1.75%. That's the reason why that they can't really lower it aggressively because of the money outflow that might be happening. But because of the economic growth rates are weak, so therefore we might expect to see some measures to boost the economies. Probably one part is coming from the fiscal policies, and therefore, if you look at it, the 36.6% of the government debt is the percentage of GDP, which is much lower than any other countries. We expect that number to pick up in the future. So monetary policy as well as the fiscal policy might be moving into the direction where it might be boosting the economy in the future.
All right, understood. Mr. Yu, thanks so much for coming on today. We appreciate your insights.
Thank you very much.